Hey there, welcome back to Mindful Mint. I got a question for you. Are you scared of loans? Do the words debt and interest make your heart start racing? If you answered yes, don't worry, you're definitely not alone. A lot of people feel anxious about loans, but stick around because I'm going to help take that fear away. Let's face it, loans can seem really complicated and intimidating if you don't fully understand them. But they don't have to be. A loan is actually a pretty simple concept. It's basically just money you borrow from a bank or lender that you agree to pay back over time, plus a little extra called interest. Loans allow people to afford major purchases and expenses they couldn't cover all at once out of pocket. Things like buying a house, getting a car, paying for education. Loans make big goals like that achievable. Without loans, a lot of folks would be stuck renting or taking the bus their whole lives. But I get it. The idea of owing money and having to pay back interest on top of that, it can feel overwhelming and stressful. I'm going to explain different types of loans and share some tips for reducing loan anxiety. All right, let's begin by dissecting the major types of loans. Starting off with student loans, these are primarily designed to assist in covering the high fees associated with obtaining a college or university education. They usually offer lower interest rates and flexible repayment options. But the downside is that this debt can take quite a few years to pay off and could potentially affect your credit score. Next up, there are personal loans, usually sought after for managing personal expenses. This could range from consolidating debts to funding a vacation or home renovation. The advantage here is flexibility, as you can use this loan for a variety of purposes. Compared to other loan types, interest rates on personal loans can be quite high, especially if your credit score isn't at its best. Moving over to mortgages, these are long-term loans typically utilized for buying property, be it a house or a commercial space. The property itself acts as collateral, ensuring lower interest rates. The flip side, however, is that if you default on your payments, the lender could seize the property. Finally, auto loans are designed for the purchase of vehicles. Much like a mortgage, the vehicle you're purchasing serves as the collateral. One major advantage is the ability to own a vehicle even if you can't afford it outright. But the downside is that failing to make payments can lead to repossession of the vehicle. Now let's talk about interest rates. They are the fee charged by the lender for lending you money, essentially the profit they make on the deal. It's typically expressed as a percentage. For instance, a 5% interest rate means you'll be paying back 5% more than you borrowed. Interest rates are calculated based on several factors, including the type and duration of the loan, your credit score, and the overall lending environment. They can also vary significantly between different lenders, which is why it's crucial to compare rates before settling on a loan. One key thing to note about interest rates is their impact on the total amount to be repaid. Higher interest rates mean you'll spend more over the life of the loan. For example, a $10,000 loan at a 5% interest rate repaid over 5 years would cost you a total of $11,322.74, whereas the same loan with a 10% interest rate would cost $12,748.69. Hence, understanding and budgeting for interest rates is crucial in managing your loan repayments. Let's now dive deeper into the strategies you can employ to alleviate your loan anxiety. The first thing you need to do is familiarize yourself with financial terminologies. Understand what an interest rate is, what it means to default on a loan, what your grace period signifies, and more. For instance, knowing what mortgage is could help you make an informed decision about whether it's the right loan for you. Next, crafting a budget is crucial to managing your loan. It should be built around your expenditure and account for your monthly loan repayments. An example of this could be, if you earn $4,000 a month, you should aim to keep your monthly loan payment under $1,000, following the 25% rule. Shopping around to compare rates from different lenders is another important strategy. Just like you would compare prices for a product, you should compare the interest rates, terms, and repayment options offered by different lenders. This can help you snag the best deal and potentially save you a significant amount of money over time. If you find all this daunting, don't hesitate to get help from professionals. Financial advisors and officers can guide you through the process. A financial advisor can help you craft a budget and devise a savings plan, while a loan officer can give you insights into different loan products, their terms and conditions, and assist you in the loan application process. It's also important to manage your stress, as dealing with loans can be overwhelming. Techniques like deep breathing, meditation, and exercise can help keep your stress levels in check. For instance, you could incorporate a 10-minute meditation into your morning routine, or take a brisk walk each day to clear your mind. Reading all terms, conditions, and fine print before signing anything is a must. You need to be aware of any penalties, fees, or clauses that could affect your loan terms or your ability to repay. Building an emergency fund is another practical strategy. Having some savings set aside can cover unexpected expenses and prevent you from missing repayment. Creating a roadmap for repaying each loan over time can also help you stay on track. This could involve setting up automatic payments or marking your calendar with payment due dates. Moreover, it's important to celebrate your milestones, whether that's making your first loan payment or paying off 25% of your total debt. This can help keep you motivated and focused on your ultimate goal. Remember to separate facts from irrational fears. For example, the fear of not being able to make payments on time can be tackled by setting reminders or setting up automatic payments. Loans indeed open up opportunities most people need, and yes, borrowing responsibly is a big commitment. But with proper knowledge, a well-laid plan, professional advice, and stress management, it becomes easier. So learn the lingo, make a budget and repayment plan, ask for help, and actively manage your anxiety. By following these steps, loans don't have to be scary. You've got this. Don't hesitate to reach out if any other loan-related questions arise.